Hello, this is Archana from Butterfly Queen um, channel. So today is 2/5/2023. Let's go ahead and do an overview of my watch list. This is and go over the charts, weekly charts. So I have this watch list named Top 5, which is the top 5 holdings of the ETFs of the S&P 500. So you have XLK for the technology, you have SMH for the semiconductors, you have XLI for industrials. So I've taken all those ETFs, taken their major top 5 holdings, and made a list of the companies. So this is around 50 companies that I look at on the weekly basis to know what is bullish, what is bearish. By doing this, you can easily not only know which sector is either bullish or bearish because the constituents are bullish or bearish, but you already have some trade ideas. So let's go ahead and look at it. So over here, I will be looking at the weekly charts. Okay, this is the daily chart. What happened to the weekly chart? Okay, that's fine. Let's go ahead and change it to this. Okay, so let's start with Apple. The weekly chart is looking bullish, but we are right at top of the Bollinger Band. We closed above the 55-week moving average. So it is bullish, but it has been going up for 5 straight weeks. A small consolidation here with a check back to this 100-week moving average at around 147, 148 would be good. So it would be an inside week for continuation up. So small consolidation here, forming an inside week, testing its 100-week moving average back to this 148 area would be healthy in Apple. And if you look at the stochastics and RSI and MACD, they all have turned up and are pointing upwards on the weekly. So this looks like a continuation higher with some small consolidation for next week. Let's look at Microsoft. Microsoft has this small, it closed below the 55-week moving average. It has closed below the 100. So it is taking time. Of course, it is not as powerful as Apple in terms of its charts. So it has not had the 4 weeks, 5 weeks that Apple had. So if Apple has a rest this week, we can easily look at Microsoft to take charge. So it would have to get above this 264, which is the right 264, which is a 55-week moving average, close above that, which would also be this high. So close above 264 for a chance to go to 275. um, all the indicators are, including TTM squeeze, has fired long. So Microsoft, if tech remains um, solid for this coming week and Apple takes the rest, Microsoft can pick it up. Okay. Now, Visa, if you look at Visa, we are looking at a doji on a weekly time frame. It's had so many days of bullish momentum. RSI is almost at overbought, not there. 60 is not overbought, in my opinion. Stochastics is overbought. MACD looks good. So everything looks good in terms of the indicators for bullish. It has not even gotten. So this is more of a continuation pattern. It broke out of this downtrend line, right? It broke out, came back, checked back into the downtrend line, and now it has broken out. Now we are over here at this supply zone. This is the big supply zone over here, right? This entire thing is a supply zone here. So over here it can find, and a weekly doji means that we can easily have, a small check back down here to this 221, which would be the 8, right? Which would be the 8 EMA. So it can come back, check back this, and have a small reversal on the weekly, come back to this 220 to 222 area before it can go higher. That would be, and if it closes below 220, then you're looking at lower levels again, trying to again test this line. um, I don't think it can go there that far. with the market the way it has been reacting, it's just going to be a small pullback here. If the market, yes, if the market falls apart, yeah, it can, but I don't see going below 216, especially the way the charts look right now. But for this coming week, if I have to take a bearish trade, anything below this 229 level, I will look for a check back to this 222 area. So I can get those 4 5 points over here easily in this coming week bearish. MasterCard, let's look at MasterCard. It is consolidating above all the moving averages. It is digesting the supply before it can move higher to test this all time high and go further. So it will take some time. It can easily consolidate here for a week or two more, and be within this inside day, right, inside week. Okay. Now, this big bar that we're seeing is because of that NYC error that we had. We have some bad prints. So that is going to create some issue. But if I take the other highs, right? So anything above 281 to, 381 to 382 would be bullish for a check back to 400, in my opinion. Now let's look at United Healthcare. Okay, United Health. This is the first time. This is a weekly chart, so I'm showing on a longer time frame. This is the 2020 COVID lows that went to this 233 week moving average. This is the 100 week. It has never, after it crossed COVID lows and it came back above this 100 week, it has never tested that until this Friday, right? Until this last week, it did not test the 100 week. Now, this is right at the support. Now, what it does over here, right? What it does over here can determine where it goes. If it tests this and comes back up, it would be a successful test of the 100 week, which it has not done until it came up in during the COVID lows. So anything over this 440, right, this 470 to this 450 area, it can consolidate, try and form a base till all the indicators reset. Okay, because as of now, all the RSI, stochastics, and MACD are pointing downwards. They have not turned around at all. So maybe just, it can go down further, but if it goes below this 450, right, 450 to 448 to 450, if it goes below there, then it can come down even further, and I don't see any support until 420. So below 448 it can go to 420, and then even further down over here 385. But let's not get ahead of ourselves. The only thing is, the all the indicators from TTM squeeze to RSI to stochastics to MACD are still pointing downwards. But this is the first check or test of the 100 week. So I'm going to be looking at what it does next week. If next week it forms a reversal, come to this 450, form a reversal, kind of a hammer or anything, that would be a first retest of the 100 week, form a base, and then go up possible. But for this coming week, it is, if it breaks, it is breaking a nice double top, right, from here and here, double top break. It would be neckline break over here. So you're looking from 450 to 540, right? You're talking about another 90 points. So if it comes from 450 to 360, another 90 points, that is my 233 week moving average here. That exactly becomes the measured move. So that's what I'm looking at. It is very important that UNH hold this 450 area and consolidate and move higher. Otherwise, it would have broken the neckline, which would target the 360 to 362 area as the measured move. Now let's look at J&J. J&J again, it is above this level. It broke out, consolidated multiple times. Always it hits this area and then bounces. So we are again coming back to that area where it bounces or hits, retests. So until it can easily, consolidate over here, check back, keep doing this hitting area of this. By that time, this moving average would have caught up. And then if it falls below, it's bearish. If it finds a bottom over here and starts going up, it could be a channel again, from 150 to 180, a 30-point channel that you can trade in. Now let's look at PFE. Actually, PFE looks better. Um, PFE, right? Pfizer, if you look at it, it tested the 233 week, popped up, came back to almost test the 233 week. It has given a kind of a small, spinning top kind of a reversal candle over here. So tomorrow, if it, or this coming week, if it can get over this 44 area and start popping, it would be a nice morning star reversal. And I mean, the indicators are pointing downwards, but MACD has not yet crossed over. So it can easily turn around. If we go above this 45 area, we will be looking at these definitely popping up in terms of the indicators. So this looks good in terms of a reversal. AbbVie, let's not look at, you don't need to trade everything every time. We have PFE as a possible trade, UNH as a possible trade, Microsoft and Visa as a possible trade. So over here, this has been coming 4 weeks down. It is not close. It is near a demand zone, but not as much. The moving averages are a little lower. This bottom is a little lower. Everything is pointing downwards. So why would I try and trade something when I have other trades to do? So for me, AbbVie is in no place to trade for now. Let's look at TMO. TMO looks bullish, but it is at the supply zone from here, and again to the same supply zone. Everything looks bullish. We just need some more consolidation below this 580 area, 580, 600 area, right? Some more consolidation before it can go up. So I'm just waiting. Or if it goes below this 550 area, 560 area, then what? We come to this moving averages, which is 540. So this area doesn't have much risk reward. So here, if it falls, it comes 10 points down, right? We are at 5. No, if it falls below 560, then you're looking to 540, right? 20 points. But then your stop would be at around 590. So there is not enough risk reward. There is like 40 points. You have to put a stop to get 20 points. So on the downside, as of now, we do not have much risk reward. Now for upside, we have been hitting. So until and unless it can get over 600 and stay over 600, I'm not looking at a long either. So TMO, no trade again. Now Amazon on the weekly, this looks like a bearish candle. And on the daily also, if you look at it, it had a gap here and a gap here, which formed an iron bottom. But then on earnings, it again gapped down. So now we have a gap here and a gap above. So we have almost an island top being made. So with Amazon, I am a little wary. If it goes below this 98, then I think it tests the 90 and then probably fills this gap here. There is a small gap over here. Okay, it can probably fill this gap over here first. So I'm being very very cautious with Amazon. If it definitely goes below this 100 area, I think it goes to 86. We will not find support. It has all the bullish divergence, right? There is RSI bullish divergence over here. Price is coming down. So bullish divergence means price is coming down, but RSI is pointing upwards. So we still have the bullish divergence, no doubt. But what it has done on Thursday, Friday, in terms of the weekday, the daily candles, they don't look that good. Tesla, it has been running since January from 101 something to almost $200. So let's look at it. It has come to the supply zone again. So if we put a line over here, simple line over here, no big deal, it keeps checking back here. Now it's coming from the bottom. It has done so much work, to come from 101 to this almost 200 area. It's done so much work. that it needs to consolidate or come back to check this 150 area. Okay, so it can easily do this, come back, check this 150 area before it can go up. So this test of this area seems definite for me. So that is what I'm looking at. So if the S&P and the Nasdaq look weak, so this is what I'm looking at. This is what I will be training for and getting out before, the moment it comes to this 150. That's what I would be looking at in terms of Tesla. Now, Home Depot, I'm looking at it in terms of consolidation. Now, this is over here. Um, it has been, this area has been resistance over here. This box, if you look at it, it comes into this area, falls back, comes into this area, falls back, comes into this area, falls back, comes into this area. It has fallen a little bit, but not as much. So if this week we can get above this 332 and stay above this 332, I am looking for a continuation up. The RSI is consolidating, looking to go up. MACD is nicely opened up. We are over here, we are pointing downwards, but if we go above this 332, this would turn around and it would be a nice bullish thing. So Home Depot is looking bullish to me. Okay, so now let's look at McDonald's. So if I look at McDonald's, it has, you can say it is going nowhere from this 260 area to this 272 area, right? It's between this 12-point range. Now all the momentum to the upside has faded. The RSI is pointing down. MACD is pointing, stochastics is pointing down. MACD is almost crossing, right? So over here, if it goes below this 259.92, if it gets below this 259, let's make it 259.50. If it goes below that, we can get to this 255 and get to this 250 248 area. So this is what I'm looking at. So where would I be putting my stop, right? I'm looking from 259 to 249, 10 point move. I would have to keep my, on the weekly, right? So I'm looking at swing trade. I would have to keep it around 270, 275, which would be giving me more than. So it's a risk one to make one kind of a scenario. Um, I won't be trading that because of that kind of risk reward, but there are better trades, in my opinion. So let's look at Nike. Nike has been, we are looking at, it did a, there are two opposite candles. This one is pointing up and this one is pointing down, right at 1.618 retracement. Okay, so right at the fib target and the 100 week, it formed a reversal. So now it needs to probably check back, come here, right, and then go back up to challenge this again. So I am waiting for a week or two of consolidation or check back. It can even come back to this check back, and by then this would have moved up, this would have come here. So at around this 110 to 112 area, I would be looking to buy. Or unless and until we gap up and go above this 132 area. So that's what I'm looking at. The ideal thing would be for it to come here, right, to this 115 area, anywhere, come here and then go up. That's what I'm looking at for Nike. Then let's go to UNP. UNP, um, TTM squeeze is higher. Um, Even though this is in stochastics is pointing down, it is in a territory buy zone, so it can easily turn around. But here we are in a channel here and consolidating between this 220 and this 200, right? So we are in this channel, so it will take, when it breaks, either above or below. So till that time, it's in chop, no trade. So with the volatility the way it is, I don't think we can, have a trade where we sell something here or sell something here and make cash flow. So I'll see what I can do with this one. Maybe UNP is an iron condor kind of a trade. So that's what I'm looking at for UNP if possible. Now let's look at UPS. UPS, this is the bad print that we had from the NYSE, but that has created a big candle pointing upwards, which is a hammer, and it broke out above that. Now it has it the upper Bollinger Band and the 100 week has formed a resistance for now, but anything over 192.33 is looking for 200 and then looking for 207.25. um the main thing is, yeah, you know, I would rather have a small weekly inside week over here, consolidate little bit before it can move higher. But the reason for that is all these moving averages would have turned. It would have been it would be a better setup, and I would be able to. So if it has a small inside week, I will have the weekly candle over here, so I can keep my stop at around 184, and then look for this 200. Otherwise, now I would have to keep my stop at below this at around 175, 176. So the risk reward again doesn't line up unless and until we just break out from here. We gap up tomorrow and we continue, then it definitely becomes a chase kind of a day trade kind of a thing. So I'll be looking at UPS for that. RTX Raytheon, with all this balloon shalloon thing from China, and also defense sector maybe again in spotlight, but the chart looks really bad. Um, Even though the moving averages are pointing upwards, the Bollinger Band is pointing upwards. These two candles sandwiched within each other. So a bearish one, a bullish one, but this, and then again a bearish weekly. Everything stochastics in RSI pointing downwards. I would rather wait for it to come to this 91, 92 area, 90.3, and then pop up. Now let's look at Honeywell. Um, Honeywell, the momentum has come down. Everything is pointing down, so it can easily come here, test this area. There is a small gap here again. There's quite a bit of gaps left in so many stocks, so it can come to this gap over here. It would be nice check back, right, to this 233 week. So come here to this 185 level, fill the gap, and then pop higher is what would be the ideal setup. But it has consolidated, this is a rounded top. It has consolidated quite enough. Um, Again, the market the way it is, it would be much better for it to come fill this gap before it can move higher. Caterpillar, Caterpillar has given a reversal signal on the weekly. This was, it gapped up, last week, had a nice bullish candle, and then we gapped down and we have continued down. We barely closed above the 8 week moving average. So now, if we open lower below this 245.80, then we are looking at a check back to this 230 area. And then So then I'm looking at Deere. Deere, again, part of industrials. Honeywell was not that good looking, going down. Caterpillar reversal. Deere has reached its middle Bollinger Band. It has, come back and checked back this high, right? So from there, in that point, it has reached the support. Now it depends what it does. What it does at this 400 level, if it continues, then we are looking at this 375, 380 area. So you're talking about break of 400 brings it to 375, 380. So you're talking about 20 points, and you can put a stop here at around 405 or so. because if it comes back up, then it would be a reversal. So you can have a nice 5 to 7 point stop to get this 20 point down move. So Deer looks good in terms of going down. Now let's look at Google. Google looks better than Amazon, definitely. Um, but it also has had these 4 big weeks and earnings. It has not yet, the TTM squeeze has not yet fired long, but everything else in terms of stochastics and RSI are bullish on the weekly. It definitely has the bullish divergence, price going down, the MACD going up. Okay, the RSI doesn't have. I mean, this RSI also has bullish divergence, so it has an RSI and MACD bullish divergence. So that makes it good enough for me to look for longs in this. But it needs to go above this 105, 106 level for a continuation to this 111 area first, and then 120 in time for a swing. Now let's look at Netflix. In terms of Netflix, if I look at it, it is there are two sets of weekly moving averages coming here to this 397 400 area, which is also the supply here from that big down move that we had last year from gap down in earnings. So I think it's getting to a point where it, of course, it can continue to this 335, 395, 400 level, but I would be waiting for that to happen and then for consolidation or come back to this 8 day. So I am the easiest trade on Netflix is sell a call spread over here. Uh, any pop that it gets towards this area, sell or put call spread is what I'm looking for in terms of Netflix. Now let's look at Disney. Disney is having earnings coming up over here this week. Now there is a weekly gap here that it could fill at around 119 to 120. It has, 5 green weeks. So, it's always earnings are a hit or a miss. But looking at what Netflix did, looking at what Meta did, they're all streaming kind of platforms or ad kind of platforms. Consumer is doing very well. So in that regard, I am thinking of a lotto trade in terms of doing a call spread targeting this 120 gap. So if I have a down move, getting a 110 call debit spread is what I'm looking for. But the options and everything show that it is bullish in terms of the positioning too. This is Lindy. I think Lindy also has earnings. So, you know, everything looks bearish over here. It is nicely consolidating, slowly going down. But, you know, this is a bearish gravestone doji. So anything below this looks for this 300, and anything below this 305 can keep going further down. So earnings are there, and I don't know much about this company, so that's what it is. It looks bearish on the chart, so I have no trade for this though. Now let's look at FCX. FCX, if you look at it, right at supply zone, it is consolidating. There is a gap here, it could fill, which would be the 8 day. So unless and until it can get over this 45 and stay over this 45, I'm looking for either a consolidation or look back to this, get back to at least this 40 to 38 area again. So that's what is my analysis of FCX. Now NEM, this looks like a bearish chart. On the weekly, it had a big thing, and then this week it broke down. After the Fed and the earnings, this has broken down along with gold. So this is looking like it wants to go back to this 46, 41 area easily. Now let's go to Sherwin-Williams. This is just consolidating in this channel between these moving averages and so if there is volatility, just sell above and sell above as a call spread, sell below as a call spread, put spread. That's what I'm looking for. Um, I don't need to trade every stock. So this is not giving me any compelling pattern to trade. So I'm done with this. Then let's look at APD. APD looks bearish, but it is right at the mid Bollinger Band. So let's see what it does. For me, this big red bar is bearish, no doubt about it. So, any pop is to be sold from now. So, unless and until it can get above this 320, any pop needs to be sold in air products. So now let's look at PLD, Prologis. It closed above the 100 and the 55-week moving average, but it has a wick on the top because this is where it has come. Everything looks bullish, but it probably need a week or two to consolidate here before it has the energy to get above this 137.50 area to be able to go ahead. But if it can close above this 138 on the weekly, this can go quick. This can easily go quick. And then there is a gap here to fill. So yeah, I like this above 137 for a long. Let's look at AMT. This is in this kind of a wedge pattern. The moving averages are forming a resistance, and this trend line is forming support. So, it needs a week, 2, 3 weeks more, a week or two to consolidate here before it can make a decision go up or go down. So for now, whatever indications are, because of the TTM squeeze, it wants to go higher. RSI wants to go higher. Stochastic wants to go higher, but it needs to consolidate it for a week or two because, and then probably the price would, just by sheer time, it would have corrected and the moving averages would be below the price. CCI, again, I don't trade this, so I'm not going to even discuss this. EQIX, I've not traded this, so I'm just going to pass. Let's look at PSA. Let's look at the commonly stocks. Let's look at Exxon. Exxon has given a reversal pattern, but this big candle is again that NYSE. So I'm going to take the week before that low as a trigger for going short. So 109.7, right? Anything below 109.7 triggers a short for me going into next week for Exxon. Let's look at CVX. CVX has given a reversal signal, right? It's a big down move continuation after last week, kind of a spinning top at resistance. We are there at this small candle support, which was the support from here, right? It broke out. So anything below this 165.96, it can test this 162 area, but then that's a very small risk reward to go ahead and take it. So I would actually wait for it to get below 162, actually 162.37, before I can go for this 150 area. EOG. So in EOG, it's sideways for me now. I would rather go into Exxon, which has a better chart for me. So now let's look at COP. Again, it's at support. Even though it's at support, if you look at it, the Bollinger Band, lower Bollinger Band is pointing downwards. The RSI has broken down definitely. MACD has broken down. So here, I would wait for a pop to short again. So this is me anything. If we get to this 110, area, I am reshorting it. TSM, I am looking at it over here. It's consolidating over here, but with this China thing, I don't know. Why do I get to this when TXN looks like a very good chart? TXN has been consolidating over here below this supply zone, right? This was pretty much this much support, this supply. It's trying to get that out of the way, consolidating here nicely. We have this inverse head and shoulders that it can break, or you can talk about it as a nice, um, you know, this can be a nice from here, rounded bottom, you know, maybe it takes a week or two more to form a cup handle and then go higher. I am very bullish on the TXN chart. um, the only reason why I would not go with calls right away, I would rather do a calendar or a diagonal, because this is so much of consolidation. You're talking about almost two two quarters, right? From here, mid March to November, right? So you're talking about almost 2 quarters worth of consolidation. So it will take time before it can go past. So I would be looking to sell near dated calls to buy further dated calls for this. But this chart looks good. This chart looks really good. Then LRCX, another semi. So it needs to get above this 100-week moving average before I can go long. Again, this can the moment it goes above this 440, 442 area, it can easily go to this 570. 30 point rip is very easy for it. But then over here, right, 580 to the 600, maybe again, where it forms some kind of a consolidation or something before it can go up. So, but this from 540 to 580, 40 points can be easily gotten it in this. Let's look at AMD. AMD has been a laggard and now it has popped up on earnings. So this 95 is easily given that it is going to probably test this in a week or two. Either next week or the week after that, it can easily test. And why not get to this, 100 again? So let's see. This looks bullish. Everything looks bullish. All the indicators, TTM squeeze looks bullish on the weekly. Now let's look at AMAT. Again, semis look good. I'm just waiting, right? Which one? TXN, kind of a swing trade. AMD, kind of a day trade. That's what I'm getting. This is an inverse head and shoulders on, right, on AMAT, which it can easily. This would be more of this would be more of a leaning inverse head and shoulders. So it is broken out the neckline. It can test next week and then pop up. So I'm looking for it to get to this 130 area, one easily, this 130 to 138 area. It can easily get to this area. I'm looking at that. So semis look good. If you rather than it would be much easier to take triple leveraged ETF call like Zoxel, right? XOXL. Now these are utilities. If we are going to have semis and tech run, these are going to not perform much. So I'm not looking at them for now. Nvidia has been running. There is this gap at 230, 231, but there's so much little left in it right now that TXN and LRCX and AMD look better than Nvidia to trade. Now let's look at Goldman Sachs. In terms of Goldman Sachs, this is nicely forming a cup, formed the handle. Now you're waiting for the breakout. Okay, and I am looking for it to test this 405. So, this is on the weekly. So when I'm looking at the weekly chart, I have been talking all about mostly swings. I'm not looking at day trades here. But this again, if the market holds up, you can easily do a calendar for Goldman Sachs to be able to make something out of it. Meta has run up so much, right? From 87 in October to almost 200 here. It has reached this 200, is going to definitely have some kind of resistance here. So let it consolidate here and let everything catch up. Moving averages turn up properly before it can go up to this 220. So there are other, in terms of tech, we saw Microsoft, and in terms of semis, TXN and AMD look good. We have Pfizer that is at support. We have Goldman Sachs that looks okay. In terms of bearish, we are looking at United, McDonald's, Caterpillar, NEM. All these are bearish. So we have a lot of trades that we could do this coming week. Whatever the market does, I have some bullish stocks and some bearish stocks that I can work with. Okay, hope you enjoyed this and you got some trade ideas from me. See you then.